Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point in time and see what they're doing. Well, it's absolutely flat. Not too much to speak for the Nikkei or for that matter Shanghai. But Hang Seng, however, is looking at a slight bit of a knock. It's down around 0.4%. We'll watch out for that. But does that has that had any implication on the SGX Nifty? Not really. That is also currently trending only marginally in the red. Of course, we'll be watching out for how this results into the Indian opening. But well, on that note, it is the penultimate day of the expiry. Let's go across to Navneet Saluja D'Souza, who's standing by to give us an update on the futures and options space. Navneet, how is this expiry looking?
Thanks for that, Agam, and good morning to both of you. Well, so far, market remains buy on dips. At least that's what we saw in yesterday's trade. We saw lows of about 12,212, but there was a sharp recovery from those levels. Even if you look at the rollovers, of course, they picked up compared to the previous day, but you could see some pre-expiry activity taking place today, considering tomorrow is a holiday. So in terms of Nifty rollover, open interest was about 33%, but across the series, the open interest went up by just about 1%. Talking about Bank Nifty futures, the rollover stood at about closer to 36%, and across the series the open interest went up just by about 3%. But what's supporting this market is the lower volatility, and India Wix, something which we've been discussing yesterday, it closed below the mark of 12 after a while, so it was down about nearly 3%. So if any fresh buying has to happen in this sort of market, lower volatility will definitely support that. In terms of options data, what are the ranges that we're watching out for? 12,300 on the call side remains as a big resistance mark for Nifty, and on the put side, maximum open interest is at the 12,200 strike. What happened in yesterday's trade was a put writing coming in for strikes like 12,150 as well as the 12,200 and 100 strike. Actually, there was a covering seen for the 12,200 put, but a fresh writing came in at the 12,300 and as well as the 12,350 strike. What's the range you should watch out? First support will be yesterday's low of about 12,212, and of course, besides that, 12,150 to 12,350 is the range that you can watch out at least till the expiry day. Very quickly then, in terms of individual stock futures, what stood out in yesterday's trade? Muthoot Finance, which has been trading around its life high levels. Long positions were seen on the futures side. Berger Paints had a good session. The stock was up in about 3%. Long positions seen on the futures side. And something like RBL Bank, which has been trading weak, shorting was seen there in the derivatives market. And watch out for Yes Bank. After a while, the stock comes out of the F&O ban. Let's see if there is any activity seen there as well. The stock yesterday, however, was down about 3.5%. Very quickly then, on the FI front, cash buying continues. 1,400 crore of money came in the Indian equities, but on the index futures, they created more of long positions. 7,000 contracts were added, and now the net long ratio is about 57%. On the index options side, there was some hedging seen. As you can see, on the put long side, nearly 20,000 contracts were added. With that, it's back to you guys.
Well, thanks a lot for that, Navneet. So it'll be an interesting day, and I dare say today and on Thursday, the FNO show will be very interesting to watch because it's today is the penultimate day to expiry. Then we have the weekly, monthly, annually, decadal expiry as well. So yes, it's in that sense a pretty important time. On that note, let's get in Mayuresh Joshi, head of equity research at William O'Neill, joins us right now on the show. We want to talk about it as if the decade has ended, but let's get real. Let's talk about the here and now, Mayuresh. What's happened in the decade did not necessarily happen again. But just wondering, as we approach this end of this year, and of course we'll talk once more before this happens as well. Are you more gung-ho about what will happen in the results season, Q3, because of this corporate tax and the base, etc.? Or are you more optimistic about what the government will do in the budget, and that being a key driver for markets?
Morning, Neeraj. Morning, Argam. Sorry, I think my voice is a little... So again, I think it's going to be a mix of both factors, right? So corporate earnings obviously will define the longer-term earnings trajectory that the markets probably look at, both from a valuation perspective and a re-rating perspective as well. The tax cuts and so on and so forth had obviously aided bottom lines for the quarter gone by, but I think there has to be top line growth which probably comes through, which is extremely critical from a longer term re-rating perspective. So how the numbers stack up is going to be extremely crucial for the markets. Case in point, I think a lot of FMCG companies have pegged the second half to be relatively better than the first half. So how the demand probably shapes up is going to be extremely critical from an earnings perspective. So earnings is going to be extremely pivotal point as far as the markets are concerned. But again, I think the union budget and again the expectations in terms of announcements that will come through. And it's a typical scenario, I think. Most industries will have a lot of expectations coming through. And that again will start getting played out. The Exchequer has probably made certain statements regarding personal tax cuts and so on and so forth. So in what form does that actually come through? I think that will also probably keep the markets excited.
Right.
So I think markets are going to face a lot of data flow, news flow over the next few weeks. So I think it might be volatile, but very, very interesting time for the markets. But I think earnings are extremely critical from a longer term view. Budgets will come and go. I think the announcements will come, but again, that will be taken up as something which is a historic event once the budget is gone. So I think earnings will be the pivotal point, and that is where the focus should lie from a long-term perspective.
Mayuresh, are you reading into the latest developments with respect to Reliance Industries, where they have issues with Aramco? Of course, at this point, it's hit a little bit of a speed bump. But even overall, with the levels at which it is currently trading at, would you take the small correction as an opportunity to move into Reliance?
Why or why not?
Yeah, why or why not? Yes.
No, so I think what the stock has probably done over the past 1 year, I think, has been phenomenal, and I think it probably gestates a lot of positives that the street probably believes over the next 3 to 4 quarters, to say the least. Now, if you probably divide all their subsegments at this point of time, obviously the benefits that will come through their core business is going to be very, very evident, because with the new IMO regulations expected to come through from 1st Jan, that's going to probably have a lot of effect in terms of their core earnings. The capex is largely over even in their core businesses. So I think when you talk about the gasification plants or the gasifiers itself, I think the feedstock that they probably get and the refining margins that they probably deliver to Singapore GRMs, it obviously cracked this quarter as well. So they're around 4.2, 4.3. I think the outperformance will still continue. The retail arm probably is delivering stable numbers. What we've probably seen in terms of the telecom sector as a whole, with the hikes taken, though relatively lesser than the existing incumbents, I think that still pushes up their ARPUs. And yes, I think there are some speed bumps that one really reads about, right? There's been some government litigation as well in terms of what the government probably feels that they should not be selling assets on to Aramco and so on and so forth. But what comes out of that, I think, ultimately will determine the longer term trajectory. I think a lot of gestation has probably happened, in my opinion, into the stock at this point of time. I think as the deleveraging happens, as one believes, if all these news probably goes through in the next few quarters, will probably result in higher dividend payout, because it probably becomes a cash-free company from the debt that it probably has. But there are ifs and buts attached to that, and the street is probably taking cognizance of that. Longer-term perspective, I think the stock still probably assuming all these factors and laying a probability that most of these factors should go through in favor of Reliance, still probably looks positive. So yeah, so investors should hold on. To enter the stock, you need to start a SIP or something like that. So I'm not really sure whether there is a definite entry point at one go for the stock.
But I just wonder that, I mean, so many people now classify Reliance as a telecom company and no longer just an oil and gas, or predominantly a telecom company. At some point of time, somebody will ask this, that whether it makes from just a minority shareholder's perspective to make an entry into Reliance at these levels, or make an entry into Bhatia Airtel at these levels. Both the stocks have run up a bit. Bhatia Airtel, incidentally, is the best performing Nifty stock. Yesterday, it eclipsed Bajaj Finance as well as the best performing Nifty stock, YTD. The question is, which is the better one to enter into right now? Mayuresh, any thoughts there very quickly? No, between the two, if you had to choose one.
So I think Jio obviously has the advantage in terms of ramping up its SMS share, right? But Bharti has held on to its competition. So I think if you look at the churn ratios for Bharti and Vodafone has lost big time. The capex that Vodafone needs to do to transition from 2G to 4G is still significant, which means a hit on their cash flows even now. Consider the AGR hit on their balance sheet, assuming the capital raising that probably happens, assume the kind of ARPU increase that one builds in. And largely, I think the next 2 quarters and FY20 will be a washout, but FY21 might start improving. So I've always maintained, I think if anybody's holding on to Bharti, hold on. But Reliance also has that advantage of probably demerging its businesses and creating value accretion as well for retail, for telecom, and that probably becomes a feather in the cap for Reliance as well.
I think we have to remember that a lot of people underestimate the retail arm of Reliance, which is huge. And that is something which of course Reliance is looking to unlock over the 5 years. We'll be watching out for that. But I'm going to quickly go across to our research team to get in our stocks and news, as well as the telecommunications space, which is in focus right now as per our discussions. But I'm going to get Nikki and Sumit to join us. Nikki, let's start with you on the stocks and news.
Sure. NIIT Tech first, where a buyback offer has come through. The company has announced that it's going to be buying back more than 19 lakh shares at a price of 1,725, which is a 10% higher price as compared to the current market price that we saw yesterday. The company is going to be buying back 3% of the equity using the net worth of around 20%, and promoters also would be participating in this buyback. So do keep an eye out in this one. Hindalco, yet again a positive coming in on this counter. You have a Muri refinery in Jharkhand which has resumed production, and the operations was shut since the start of this year, April 10, 2019. It's expected to be positive for the company because 10%, roughly around that, alumina production comes from this refinery. So you're expecting some amount of positivity on account of that, and the company with this may not be needing to import alumina. So also keep an eye out in JSPL because the Australian court has approved the restructuring scheme of an external debt of its Australian subsidiary. Now remember that the consolidated net debt to EBITDA has been high, on the higher side, as much as 4.8 times, and any restructuring that comes in is expected to be positive because it generates cash flow. And remember, for the second half of the financial year, most of the estimates suggested that the company might just fail to repay the debt obligation. So we're keeping an eye on this one because this is expected to bode well for the counter. IRCTC, where the company has signed an MOU with Hotel and Restaurant Association of Northern India. This is for listing the association member hotels and their room rate inventory for sale. Also, we're looking at Lux Industries. Now, remember, the stock tanked as much as 7.5% in trade yesterday. There's a bull deal out there where the promoters have sold in 3.8% stake in the counter, and on the buying side, you have Royal Bank of Scotland, which is bought in 1.8%. Promoters have said to, sale has been executed by promoter group as a part of strategic divestment process. So do keep an eye out on this one as well.
Right, Nikki, thanks. But once again, Sumit, we have telecom in focus. What do you have for us?
Well, Vodafone Idea and Bharti Infratel both will remain in focus because the long stop date for merger completion of Industars with Bharti Infratel ends today. Now, if you remember, earlier on October 24th, this long stop date for merger completion was extended by 60 days, which ends today on December 24th. Now, so far there hasn't been any announcement related to merger completion, and that is because the company is yet to receive the government approval pertaining to FDI enhancement of its limit. Now, what it means for Bharti Infratel, it means that the long drawn overhang of merger completion with Industars continues for the stock, and there will be doubts whether they'll go ahead with this merger or they'll cancel, or they will still extend the long stop merger date by another 60 days or 20 days. We'll have to watch out for because it ends today. And for Vodafone Idea, it means that they cannot sell, they still cannot sell, or they won't opt to sell their stake in the merged entity, because earlier, if you remember, the company had indicated that they will be selling their stake in the merged entity, and the funds that they will be getting from the stake sale they would be using to repay that debt.
All right, Sumit, Nikki, thanks for joining us and getting us those updates. But, Mayuresh, before this, we were talking about the retail sector. I just want you to, come in and add on what you feel, what the retail sector is, how it is in India, opportunities there, and what a potential listing of Reliance's retail arm can also do for the markets.
I think it might be phenomenal, right, for the sector as a whole. So if you stack up numbers and what Reliance Retail delivers in terms of top line, and you probably take the top line of all the other listed retail players at this point of time, it is still far larger. The second element obviously is the SSS growth. So how these companies are able to have their capex planned in lieu of how the SSS growth will be is going to be extremely critical, and how they probably manage a lot of the internals as far as the retail sector itself is concerned. So whether you're talking about groceries or the private labels, ex-groceries as well. So I think the kind of numbers that then get exhibited on all these factors put together, I think are going to be critical. But just from a number standpoint, I think the kind of volumes that Reliance Retail do, surely, I think is far, far larger than all the combined entities put together. You can probably look at how the scale probably then then stacks up for all these players. Yeah, but it's an interesting space. So I think DMart is again a case in point, which has done phenomenally well. And it has sustained those higher P multiples as well, because the earnings delivery has still kept on coming in. And they've been very, very conscious in terms of adding on to their stores. So they add stores, but in a profitable manner. I think those businesses might probably stand out going forward as well.
It's quite interesting what some of these leaders are doing, one in terms of product innovation, two in terms of things that they do to stay ahead of the game, and not just in the innovation, but it also in terms of maintaining that leadership edge. I mean, DMart, a case in point, Trent is slowly coming out of its hibernation of sorts, and Reliance Retail by the mammoth size that it has. There's just so much of talking point there.
So I think they're also innovating, right, Neeraj? So I think for Trent, for example, I think the Zudio part, I think is an affordable part of their business, which is affordable. I think though margins are relatively lesser than what they are doing. But again, I think
widens your reach.
And again, West Side, I think, look at the private labels, because the kind of contribution that private labels will have does improve your gross margins as well. So I think they probably have understood how competition is stacking up, and they're probably innovating in a certain fashion, as you rightly pointed out.
I must say, Adam did a very nice piece.
Yes, I was just going to plug in my story on Trend right now, that we do have a story up there, and you can read all about, West Side as well as Zudio. A lot of research has gone into it. I'm not going to boast about that, but yes, it'll help you in your analysis of trends, certainly.
Okay, I would have shamelessly plugged that too, because it was a very nice piece of research, to be honest. But hey, it's 8:45. Let's focus a bit on the charts as well, and then we'll come back to the fundamentals. Charts, derivatives, all put together, and how is trade looking like? Let's get in Brijesh Bhatia. He's head of research at Dealmoney Securities. He joins us right now on the show. Amit Harchekar, director at Index Genius Investment Advisors, as well with us. Brijesh, good morning. Let's start off with you. Your bullish stance paying off thus far. The question is, if somebody is looking to create some fresh positions a day before expiry, what would your advice be?
Good morning, Neeraj. The bullish stance continues. I think probably we might see around 12,340, 350. So for a Nifty on a fresh stance, I would slightly wait for around 12,200, 12,220 zone to take a fresh long bet on Nifty. But I think considering the tomorrow's expiry, Thursday expiry, 1 day to go, I think I would stick to Bank Nifty for an expiry trade, because if you look at the Bank Nifty structure, it's still 32,500 on the higher side, is showing the huge writing. So still, I think there's a stance there that might see a 200-300 points rally. So as SJ is indicating around 15-16 points negative, I think Bank Nifty might open slightly around 100 points down. So at around 32,220, 32,260 on the spot could be a good entry on Bank Nifty, keeping a back targets of around 32,600. Because if you look at the historical move on the Bank Nifty, when generally there are the highest writing on the strike, Bank Nifty try to shoot out slightly higher, around 800 points of the upside, then falls back. So I think I would take for the December expiry, I would take a stance on Bank Nifty, keeping a stop loss of 32,074 on the spot.
Okay. All right. Amit, how about you? How are you placed when it comes to the benchmarks at this point?
Well, I would say if you see yesterday's move, there was a lower low after seven consecutive highs. So this has led to a formation called 7-bar reversal on the daily basis. If you see from a 2 months perspective, the entire structure in Nifty has unfolded into an broadening ascending wedge. So right now we are at upper resistance zone of a broadening ascending wedge. Generally the reversal happens when the prices react around 2% from the highs. So we believe the short-term reversal zone on the Nifty futures, that is placed at around 12,230. If that gets violated, even on the opening trade, I think the trade would be on the short side. We would be suggesting a smaller stop loss of around 12,350, and target is seen as 12,000. If you see from a currency perspective, although the Nifty is trading at a higher band of the resistance zone, but the USD INR is only around 0.5% away from the breakout zone, which is at 71.60. We believe the moment 71.60 is taken out in USD INR, it will be positioned for at least 3 to 4% upside in the near term. So that is likely to trigger a liquidity crunch in the equity market. So we believe whatever selling which is expected in the markets, we think it may trigger from a currency perspective. So overall view remains a bit cautious, but as I said, unless we do not breach that 11,230 on the future side, one should remain on the long side.
Okay.
Sorry, Amit.
Yeah.
Sorry. I just wanted to ask, Amit, did you say that one should remain on the long side?
Yeah, the fresh positions, if anyone is holding up, he should hold on as long the 11,230 is not violated on the future side.
Okay, well, Amit, that's a change in stance, so I'll come back to you because usually, I mean, the last few days you have been saying that maybe the chances of the downside are more. So I want to ask you if your stance on the index is staying long, even if it doesn't mean creating fresh positions. What's your stance on stocks? What are the recommendations that you're giving this morning?
See, Neeraj, as I said, the whole structure I'm talking about, say, of last 2 months of oscillation, it is a broadening ascending wedge. So it is similar to a rising wedge. So whenever the pattern happens, you have to wait for a reversal to open a fresh trade on the short side. So as I said, the moment Nifty starts trading below 11,230 on the future side, my trade would be opening up short positions in the futures. So till that, I think it's more of a neutral to positive stance. Stock specific, I think I have a buy call as well as on a sell call. On the buy side, we would be recommending a buy on Petronet LNG. Here the reasoning is the stock has consolidated into a bullish flag, and it has given a very strong breakout about 274 zone. So we believe that is likely to take the stock price higher towards 288 to 290. Stop loss we are recommending on the short term basis is 268. Our second pick would be going short on HUL futures. We believe the Nifty Consumption Index has confirmed a major top on the long-term basis because it has not breached that intermediate top. And we think whatever pullback we have seen from the recent support in last few days, it is likely to fizzle out around current levels. So since HUL carries the highest weightage in that index, we are suggesting opening up short positions even at current levels. The stop loss we are recommending is 2015 on a closing basis, and our short-term target is 1830 from 2 to 3 days perspective.
Okay, Brijesh, what about you? Stocks that are in focus for you today?
I would play for a momentum bet. The first is Bajaj Finance. So if you just look at the Bajaj Finance structure, still it is in the bullish trend, and yes, it's being one of the outperforming in the Nifty. So if you look at the current structure at around 3800, when it dipped, it took a support at around 50 days average, formed a double bottom formation, rallied. And then if you look at the last 4 days of session, it consolidated in a form of a rising 3 candlestick pattern. And yesterday it broke out of that rising 3 candlestick pattern. And again, I think momentum might continue on the positive side. So at around 4160, one can take a long bet for the target of 4330 with a stop loss of 4045, which is the lows of on the Friday's low. The second bet would be the ACC. This is again purely a reversal bet I'm taking on a momentum side. So if you look at the structure, the short-term charts were on the oversold territory, and we are witnessing a positive reversal on RSI with the price forming higher lows and RSI forming the lower lows. Second, if you look at the momentum in yesterday's session, we have seen some good upside momentum breaking out of its around 4-5 days of high. And we have clearly seen that on the weekly chart, it has taken support at around 200 days average. So I think I would take a long bet around 1467, play it for the target of around 1512 on the upside, and stop loss can be placed at 1442.
Okay, so we'll be to have two buy calls coming in from Brijesh's end, but on to our special segment, Bloomberg Edge, where Yash Bhatia tells us about a pattern that the Bloomberg terminal has thrown up. Yash, good morning. I believe you have ICICI Prudential on your radar today. Why?
That's right, Agam, because there is a positive signal coming in, and like most of our guests, again, this is a long call. ICICI Prudential, that has given a positive trigger with the MACD indicator giving that positive divergence on the daily time frame. But like we always do, let's first try and understand what the MACD indicator is and how do you interpret it. The MACD indicator, as you know, is a trend following momentum indicator, and it shows you the relationship between the two moving averages of the price. A bullish signal is generated when the MACD line crosses above the signal line from below, and a negative signal is generated when the MACD line crosses below the signal line from above. Coming back to the price chart of ICICI Prudential, and on the daily time frame, we've seen the crossover take place. So in the lower panel, we have the MACD indicator, and the blue line, which which is the MACD line. That has crossed above the white line, which is the signal line, to give that positive crossover in yesterday's day of trade. Now, we've seen the stock be in a sideways trend, not going anywhere on the upside or on the downside, taking support around the 50-day moving average, which is placed around the mark of 497, just below the mark of 500. The stock managed to close higher in yesterday's day of trade, with volumes too being slightly on the higher side, moderately higher volumes as well. Coming back to the weekly chart of ICICI Prudential, and this is basically just a trend continuation. We saw a small pullback from the levels of almost close to 535 to as low as 485 on the weekly lows, and then it has again managed to creep up with the last 2 weeks being positive. We've had a good start to this week as well, and it's managed to go above the mark of 500. So we are seeing that higher tops, higher bottom formation on the daily time frame as well. So it is basically a trend continuation. We saw that small pullback, and now seems to be like a good entry point for someone who wants to go long in ICICI Prudential.
And any validation from back-tested data, Yash?
Absolutely, Agam, because the MACD indicator has worked extremely well for ICICI Prudential, because all of the 8 times when it has given a positive crossover, it has managed to move higher, and on an average, on a closing basis, over the next 1 month, the stock has managed to gain almost close to 7%.
Yash, thanks so much for putting that into perspective. And one of the many queries that have come in today on our feed is also on with regards to ICICI Pru. So pretty interesting that the Bloomberg Edge indicates that ICICI Pru is a stock that is in contention. Just want to quickly get a perspective here. At 502, is ICICI Prudential from the insurance names the best placed bet, or would you rather prefer from a trading perspective in HDFC Life or SBI Life?
I think for investment also, and as well as for trading, I would prefer ICICI Pru, because it has broken out of its nearly a triangle formation. And even if you look at its weekly chart, even after falling from around, I guess around 530, it was consolidating for around 488. We have seen a sharp recovery, and that recovery is with stronger volumes on weekly charts. So it clearly indicated every debate strong accumulation is going on this stock. Even if you look at the SBI Life was consolidating for quite some time in the narrow range, and yesterday's session we have seen good momentum breaking out of its range, even after that fall from from around 1070 to around back to around 1000 levels. So that gap is again might act as a resistance, but it clearly given a breakout of its volume. So I think both ICICI Pru and SBI Life both tend to be a very, very strong candidate for long as well as investment is considered.
Okay, Mayuresh, you tend to think that every time insurance companies are too expensive, they just keep going higher. What do you do with this?
You clearly hold on. We've discussed this time and again. But again, highly underpenetrated market. There again, as Neeraj was pointing out in the earlier case, I think product innovations are extremely critical for these players. Yeah. And they are changing their product mix as well. So I think the mix towards protection is increasing, which is a higher margin business. So the NBP, or the new business premium, is increasing at a fast rate. The value of new business margins, the VNB margins are improving because of the product mix. And again, I think the kind of the bank assurance type that they've got ensures that the OPEX probably stays at lower levels. So I think the direct leverage probably flows into balance sheet as volumes grow. So I think it's a long-term play. So I think there is no issues why you should not be holding on if you're holding on these stocks.
Can I do a shameless plug here? No, there's a very interesting set of thoughts that Vibha Padelkar of HDFC Life gave us in an interaction about how they are moving ahead. Yeah. And Forum has done a very interesting piece on how, while bank assurance is still the big anchor, right, it is slowly moving out, and companies are doing, and ties in with Mayuresh's point of product innovation, a tie-up with Bhatia, Airtel and a Paytm, and how HDFC Life is getting these bite-sized insurance policies out. Right. They're doing some incredible things, the Indian insurance companies. Let's see how it goes. Yeah, let's see. And the other interesting thing was that I read a note on HDFC Life and how it's implementing, technology to smoothen the process right from acquiring a customer until it goes ahead and pays out, and that of course is a part of the whole lot of innovation that these guys are coming up. Absolutely, yeah, for sure. Yeah. Well, Mayuresh, we have 1 minute 30 seconds, so maybe a quick thought on something that you would be comfortable buying afresh. I know we stuck along with in your insurance, but if you can quickly talk that, and then after pre-open we'll talk about the other things, but one of the 3 names or one of the 4 names, if you will. So again, specialty chemicals is something that Achha, you're doing a specialty chemicals. So you want to continue with life insurance? Yeah, I mean one life insurance bet, and then we'll talk about specialty chemicals later on. Within life, I think SBI Life still probably suits my
preference because of the earnings profile. Yes, I think the ULIP share is still higher along with ICICI Pru, but they're changing their mix. The VNB margins are improving and the return on embedded value will see significant jump. The bank assurance tie-up still is very, very critical, at least over the next few years. And with SBI as a parent, I think they've got a huge asset at its disposal to probably have the volume growth that one looks at. So yeah, I'm comfortable holding on to an SBI Life.
Okay, well, we have about half a minute left for market pre-open. So, well, we do need to keep an eye on a whole list of stocks out there. A lot of large caps are in focus today. Well, the entire telecommunications space, of course, something that will be in the spotlight, along with the fact that we have, the metal industry also in focus. This is your Asian market. We've seen a recovery in Hang Seng, so it's not as deep in the red as it was maybe an hour ago. And well, the SGX Nifty is flat as ever, but we should soon start getting your pre-open rates, and that should be up on your screen any moment. And we are not looking at a significant change. Well, there's a possibility of a higher move. So. Okay, so the Nifty currently is still finding its place in today's day of trade, but we are looking at green for now, at least the first minute. Both the Nifty and the Sensex advancing by around quarter odd percent. But well, Reliance Industries once again will be in focus because that is the mammoth that has been moving the markets off late. And it is down another 2% or 4% right now. But of course, this is pre-open, so we don't really need to pay too much attention to the 4.5% decline in today's day of trade. Of course, we will get a more settled rate eventually. Hindalco is in focus because of one of its units is going to restart and in Jharkhand, and after that, of course, that's resulting into a little bit of an uptick. Currently up 1.5% in pre-open. The telecommunications space, specifically Bharti Infratel and Vodafone Idea, will also come through because the long stop date for the merger completion of Indus Towers ends today. Infratel is in the green by as much as 1%, Vodafone Idea down by as much as 1.5%. And well, besides that, also want to take a look at something like a Tata Steel because well, that group has been quite volatile of late. So Tata Steel is flat. Tata Motors once again is something that has been leading the gains of late. That is up another 1%. And well, on the whole, Titan, let's also take a look at how Titan is doing at this point. Of course, the new entrant on the Sensex, currently marginally in the red. Yesterday it was a very strong day of Titan, moving above the mark of 1200. Let's see whether there is more strength in store as far as this one's concerned. Neeraj.
Okay, some mid caps, and I think there's some rather prices with regards to the NIT Tech buyback out, and wonder if that stock is reacting at all. It was marginally higher, nothing too dramatic there. What is not doing well? Well, again, a few sketchy names out there. Remember, volumes are so thin that small activities could make stocks react quite a bit, but Ujjivan Financial looks like starting off marginally lower. Aside of that, Colte Patil may be marginally lower. So nothing too dramatic really on the gainers or the losers list. We'll revisit some of these rates in a bit. Just mark the two IPOs that have come out, and Catholic City and Bank in particular. And let's see what that is doing in the session today. CSB should come up on your screen. Well, about 240 iffy, and Ujjivan and what that is doing in the session today, that will be an interesting one to monitor as well. 56 or thereabouts, so nothing too dramatic out here within Ujjivan as well. But not too many stocks reacting. Time Techno has this 6% reaction, but it's only first 2 minutes. Let's give these rates a chance to stabilize, and then we'll talk more about them. Mayuresh, I'll come back to you. We'll also take some technical opinion, but just come back to you because we were talking about a pocket that you think you will really like, and wonder if specialty chemicals is the theme. What do you like it? Why do you like it? What do you like within that?
No, so I think clearly the advantage that a lot of Indian companies will have with a lot of Chinese competition getting out of the way is clearly going to benefit a lot of these players. So I think a lot of these players who are into the niche products itself are clearly going to see volume growth come back significantly. Now, from a realization perspective and what they are doing in terms of capex plans as well. So Aarti Industries, for example, I think they are doing a huge capex because the kind of orders that they probably won, I think, is sufficient enough to give visibility for that one individual client to do that capex that they are doing over the next 5 to 6 years, to say the least. list. Sudarshan Chemicals, again a case in point. I think very, very niche play in terms of the pigmentation business that they're probably into. Deepak Nitrite, for example, again, I think the phenol business that the capex that they've probably done, huge capex that they've probably entailed. And again, the phenol acetone spreads have come off. But again, with utilizations improving and their base business itself, if you talk about how the numbers have stacked up for the base and basic chemical business, the performance products business, the specialty chemical business, I think all those businesses are growing and expected to grow anywhere between 12 to 15%. And that's a pure organic growth that you're probably talking about, right? The fourth one, again, I think Atul, for example, again, the LSI business or the PUC business, again, I think they are pretty much stable with EBIT margins around 19 odd %. So there is hardly any room to complain. And what we've probably gone through in terms of a slowdown fears for most companies, most sectors at this point of time, I think they're probably held out. So I think any earnings inflection that comes through with earnings recovery in the next few quarters and years, I think that can have significant value accretion from an operating and a bottom line perspective, because most of the fixed cost absorption has largely taken place. So I think it's going to be leverage that will drive earnings for these players. So yeah, so that's the space that probably looks very, very attractive over a medium to long term.
Okay. Okay, well, I also want to address some of the rating agencies. In this case, specifically CRISIL, notwithstanding yesterday's up move around whatever it was, 9-10%, and it moved about the mark of around 2,000 rupees per share, it still moved up by as much as 45% from its 2-month low. So there certainly is a lot of momentum here. Amit, may I take up CRISIL with you? At these levels, one, would you initiate fresh longs? Would you buy into this cash stock? Or would you want to wait a little before you move in? Or is this an avoid, considering the kind of momentum that you've already seen in CRISIL?
Well, my sense is the stock has clearly confirmed a long-term trend change after it has closed above 1700. So ideal strategy will be wait for a decline towards 1830, 1840 to open long positions. As I said, the 1650 will act as your long-term stop loss. If that gets violated, you need to even liquidate your long positions.
Okay, and the other stock that I wanted to take up was Lux Industries, which has been buzzing off late. Of course, today we have some news that the promoters will be looking to sell and offload some amount of stake in the company, but it's currently at 1,308 rupees per share. Let me take up Lux Industries with you, Brijesh. How are you reading into this one? What's the way forward technically?
I think if you look at the volumes in yesterday's session, it was, I think, one of the highest selling volume we have seen in quite some time. So I think I would clearly look for an exit from longs in this stock. I am expecting this stock to fall back to around 1,080, 1,100 on the downside.
Okay, a couple of stocks on which there is some outlook being asked. Very quick, Brijesh, on HDFC Bank or Bajaj Finance, between the two, which one looks stronger on the charts, or do both look strong?
Do both look this strong, but I think I would stick with Bajaj Finance. I already suggested the stock of the day, or maybe for a momentum play for target of 4,330, and possibly if one to wait for around 1.5 months, I'm expecting 4,500 also on Bajaj Finance. 4,500
also on Bajaj Finance. Well, that would take the valuations to stratospheric levels. Let's wait and watch as and when that happens. But that's very interesting. Actually, Mayuresh, can I ask you a difficult one? Or maybe we've discussed this already, but between the 4 HDFC names, which one is a good one to make an investment in? Let's say your time horizon is 2 years.
So it is indeed a difficult one. Because at one time, I think there were messages moving around that if you want to get a portfolio, I think you pick up HDFC Bank, AMC and Life, and just keep that and benchmark it against any index that you probably want, right? No, but if I had to pick and choose, I think HDFC Bank still looks attractive because as a house, I think we still believe that financials, though they have done exceedingly well for this calendar year, is still can still be expected to do phenomenally well going forward as well. Now, the better run banks, which to the likes of HDFC Bank, on all parameters that we probably talk about, will still lie there in the top tier names. Yes, there is expected to be a management change. But again, I think the transition is being taken care of in a very professional manner. So I think to hand over the reins to a new person, somebody who is from the industry, hopefully, I think that should not create more upheaval in terms of how the stock price might react. But I think the core fundamentals in terms of the lending processes, the overall underwriting standards that they probably got, in terms of maintaining that pristine asset quality, maintaining the NIMs and spreads even in difficult times when the borrowing costs probably go higher or lower, and either or, I think they're having that adjustment factor very much at their disposal, and that probably gives them the premium valuations at play. So yeah, I mean, it's a difficult question, but I think HDFC Bank probably stacks up, in our opinion, to be something that can consistently grow in the next few years.
I just want to make a small point here, viewers. I mean, you hear so much of talk around how, I mean, people compare what will happen in HDFC Bank due to the management change to what's happened in some of the other banks, wherein there will be some kitchen sinking, etc. This is HDFC Bank that we are talking about, and in all likelihood, it's not an apple-to-apple comparison. So the fact that the market is perturbed about this transition of management, I'm sure Aditya Puri and team are even more aware of that, and they wouldn't want to make this an event which will really disrupt the trajectory that they've built so carefully, growth trajectory that they've built so carefully for a bank like HDFC Bank.
Oh, absolutely, and I think they have taken that into cognizance. So I think they will do that transition very, very professionally. The other point that I also wanted to raise was that for the asset management companies as a whole, no doubt on the delivery of numbers by HDFC AMC, but a lot of AMCs might get listed over the next few quarters, right? So there is every chance that the kind of niche offerings that HDFC AMC has start suddenly get compared with the other players at large.
Right.
So I think there might be some amount of dilution in terms of forward multiples as well. So I think you have to probably just have a look in terms of who's coming in, how competition is stacking up, how listed players are probably entering at what valuations, assuming what valuations HDFC AMC is getting at this point of time. So again, I think relatively, as I'm pointing out, I think the relatively better placed banks will still continue to outperform and maintain a leadership position going forward as well.
Well, we're minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Bharti Infratel will be in focus today as the long stop date for merger completion with Indus Towers ends today.
JSPL is also in focus as an Australian court has approved the proposed debt restructuring of its Australian subsidiary.
The board of NIT Technologies has approved a share buyback worth 337.5 crore rupees. The price of 1.725 rupees per share is at a premium to Monday's closing price.
Hindalco's Murli refinery in Jharkhand has restarted production of alumina. The refinery was shut since April 10, 2019.
The promoters of Lux Industries have sold 3.8% stake in the company as part of the strategic divestment process.
And Great Eastern Shipping has delivered its Suez Max crude carrier to its buyers.
We have a shipping company in news, which is very rare of late, but pretty interesting out there. You know, the stock that is doing very well, remarkably well for itself, is Adani Green, up another 3% today after hitting life highs yesterday's session as well. So the pre-open session has been pretty strong for this one. Any thoughts here, gentlemen? Brijesh, if I can come to you on Adani Green.
I think, yeah, it's trending in a bullish trend. So if you want to really take a bet, keeping purely a momentum play, I would keep a stop loss of 134 and take a long bet for targets on the higher side around 164.
A few days ago, I had done hot money with a few experts, and none of the three experts were of the opinion that they had put anything fundamentally in any of the Adani Group stocks. It's quite interesting. But I also want to take an outlook on Container Corp. Amit, can you come in on this one? We have a viewer who does want an outlook here. What levels would you watch out for? Would you go long or short?
Can you repeat the query?
Container Corp, levels on Container Corp.
Yeah, well, my sense is the stock is into a distributive mode, so we can expect a major supply zone between 600 to 620. So my sense would be around those levels one should exit the positions. We are looking for a lower target eventually, which is around 535 to 540.
Okay, Maruti is now knocking on the doors of 7400, so keep that at the back of your mind. Mahindra and Mahindra in the green. Autos seem to have found their mojo in the last few days. One auto ancillary name, Mayuresh, I don't know if you track Jamna Auto, but has really zoomed from levels of 37.38 about a month back to about 47.5, and again starting off in the green. Have you looked at the business here?
Tracked it earlier, but then I'll wait for Argam's piece on this one.
Yeah, well, but interesting move out there on Jamna Auto. So maybe not fundamentally, but Brijesh, if you can give us a technical perspective out here on Jamna Auto. It's quite a strong move the last few days.
I think this move might continue towards 50 to 53 because we haven't seen this stock, I guess, since start of the 2019 haven't moved above the weekly 200 days average. So I would slightly wait for 50 to 53. If it acts as a resistance zone, I would exit my longs. In case it moves about 54, 55 convincingly, then I would trail my longs, or even I would add fresh longs about 54, 55, and that would be a good trigger for Jamna Auto to on a weekly basis, because we have previously also seen when it gets crossed 200 weekly average, stock has rallied another around 25-30% on a quick move. So I would wait for 50 to 53 as a crucial levels.
Okay, less than a minute to go. I'm going to quickly take in top picks from our technical experts. Amit, to you, your top pick for today.
Well, I would suggest going short on Larsen and Toubro at these levels. Stop loss would be 1345 and the target is seen at around 1270. Whole rationale is the stock has formed a lower low, breached the August lows, and right now it has retraced around 23.6% with bearish formation. So we expect this rally to end over here.
Brijesh, the same question to you, your top pick for today.
Apart from Bajaj Finance and SCC, I would go long on Bajaj Paints, because we have seen yesterday's huge long build-up coming in Bajaj Paints, and stock has moved about 520 quite convincingly. So at 520 to 523, go long for target of 555 on the upside, and stop loss would be 514.
Stay on, gentlemen. Here's how the markets are starting off. Flat in the session today. Hardly any moves there. The Nifty 50 just about a percent, or rather a point or 2 points lower. Not even a percent, excuse me for that. 0.07%. The Sensex about 25 odd points lower. Again, very flat, 0.07. And the Nifty Bank 42 points, 0.13%. So hardly any moves there on the large cap indices. Bring up the small cap indices and the mid cap indices. The Nifty mid cap, the BSE small cap. The Nifty mid cap index 0.12% in the green. The small cap index, the BSE small cap, about 0.14% in the green. But these are, well, subject to change. Yesterday, the mid caps and the small caps in particular underperformed. Keep that at the back of your mind. Get the heat map up on the screen. Almost even Stevens. Maybe there's a bit more green than red. So about 3 rows of green. 30 odd stocks in the green, 20 odd stocks in the red. What is in the green? Let's talk about the winners first. Yes Bank. Well, yesterday got pulled back. Today about 1.5% higher in trade. Hindalco about 1% higher in trade. Commodities by and large have done well. Hindalco also has a positive news of the Muri refinery starting after a gap, so that could be adding. Z Entertainment was the top gainer yesterday, up about 0.7% today. There is strength in Tata Motors, Eicher and Maruti, which means that autos are doing okay for themselves, and some strength in a stock like Coal India, which was amongst the top drags on the index, but no big shakers. Essentially, Hindalco and Yes Bank are the two names to monitor, but watch out for Z as well. We'll take a technical opinion here. Yesterday it was the top gainer, and today it's starting off well. What is not doing well? Reliance continues to succumb to some selling. So the top loser right now, down about 0.5%, not too much, but down. GAIL is the other one which is down, and Bharti Infra is down, but no big losers. That's the key thing today on the indices, on the Nifty at least. Flat day, but no key losers in trade. Asset management companies are in focus. We'll have a new AMC soon, but there's talk of how the quarter, while despite lower equity flows, has done well and higher AUMs, and that might have a helping hand on the earnings. Let's see if the AMC start off well. No, not really, just about a flattish start to both the asset management stocks today. What about stocks which are trading near highs? The likes of Adani Green, the likes of Navin Fluorine, SRF, and how are they doing? Okay, the two names, Navin Fluorine flattish, but Adani Green under 3.5% higher, 146 and counting, so this one is doing well. So these are a couple of stocks that I thought I should highlight. Agam, what are you spotting?
Well, I do have Den Networks, which is on my radar right now. It is doing well. It's higher, trending higher, but it's suddenly just gone in the green, and it's taken less than a fraction of a second, because it was actually up by as much as 4% just about a few seconds ago. But well, let me talk about Cox and Kings then. Actually, I'm not going to talk about Cox and Kings. Let's take up Chalet Hotels. It's something that we had spoken about yesterday. That is up and about. It's up around 2.7%. We have Lemon Tree Hotels, which is doing, which is gaining 2%. So it's turning out to be a good day of trade for hotels. We have APL Apollo Tubes, which is up higher by around about 1.5%, and Reliance Infrastructure is also in focus. That is also advancing because we do have gains worth around 4% there. In fact, that along with Adani Green is one of the top gainers on the NSE 500. But moving on to your losers, we have more weakness in Dishman Carbogen. It's down another 10%, so more weakness in store. CRISIL is looking at a bout of profit taking after the near 9-10% up move that we saw yesterday. Considering it did move above the mark of 2,000 rupees per share, it's down and inching towards 1,900. ITD cementation is down 2%, and besides that, we have something like a Reliance Capital, which is also under a tad bit of pressure. But besides that, we're actually looking at a very favorable advanced decline ratio with nearly 3 gainers for 2 losers for now on the NSE 500.
Well, some interesting names. Amit, if I can start off with you, a quick thought on Z Entertainment. Yesterday was active, today starting off about 1% higher. Would you sell into this strength?
Well, I would open shorts only below 285 because that is where maximum long positions has got accumulated in last few days. If the stock breaks that level, I would not hesitate to open short, and the stop loss would be 305 on a intraday basis. So there's a wide trading range, but as I said, the moment it breaks below 285, we can expect even a target of 245.
Okay, Brijesh, quick opening thoughts. Anything that pops up on your screen which is looking interesting?
I would look at Deepak for nitrate because stock has seen a good upside momentum now. Open low has been the same, and the stock was consolidating with the higher low structure. So going long with stop loss of 352, keeping a target of around 380, 378 on the upside.
Positional in nature, I guess, Brijesh?
Yeah, position for a couple of days.
Couple of days. Okay, Amit, Brijesh, gentlemen, thank you so much for taking the time out, and Merry Christmas to both of you. Appreciate your time today. All right, that's the view from a technical expert. Mayuresh, one final thought. We've spoken a lot about the others. Just wondering, Z and Dish, what are your thoughts here?
No, I'll wait it out, Neeraj, as I said. I'll wait for the earnings to come through. What has happened in terms of all events that has probably transpired on the stock has played out on the stock. Now, it's going to be just earnings delivery and how they're probably going to deliver on ad revenue growth, subscription growth. It has been a little bit weak, very frankly, in the quarter gone by as well. So how they're able to stack up their earnings is clearly going to re-rate those stocks. I think wait out for the numbers. No need to rush into these stocks at this point.
All right, fair enough. Mayuresh, we'll leave it at that. Thank you so much for joining us and getting us your views on the markets.
Yeah, and Merry Christmas.
Merry Christmas
to you
Merry
as well.
Christmas to you as well. Yes.
Thanks.
But yeah.
Yep, so well, that's with regards to market opinion, but sticking to market opinion at a time when the market rally is driven by a handful of quality names, business moats are gaining favor amongst investors. I spoke to Sudhanshu Asthana of Tamahara Investment Managers on a special series, Alpha Mughals, and asked him about his take on some of them. Here are a slice of that conversation.
OMCs have had this problem of the fact that they, one, are majorly government owned. There are a few marketing firms which are now private, but they were closed in between for a period of time, have a problem of subsidies coming into their balance sheets. They're not bad businesses, but generally the view is that, managements change pretty often. There's government interference in the pricing of the product. So according to me, they're not moats, right? Yes, if they were purely private and pricing was free, you had that infrastructure, they are big moats. So the reason why we don't invest in these businesses is because of that. They are cyclicals, they tend to make money, but they're deep cyclicals, we stay away from them.
Okay.
So wherever we have high regulatory interference or government interference, we tend to stay away from there. Coming to exhibition, yes, I believe they are very, very big moat businesses. I have in the past owned PVR in a big way, 7-8 years back. And the way they have structured it, I think this segment, if you have the right catchment area, so I think the advantage the leader has versus the other is that where your property is based out. And they were very strong in the north and the west. This is just for example.
Of course.
I don't own the stock anymore. I just want to tell that.
Yeah.
So they had the right areas in Bombay, they had the right acquisitions in Delhi, so they built their business quite well. If you have the right catchment area, and in Bombay and metro cities are very populated, so they have also had the strategy where in populous suburbs, in every 4-5 kilometers, 6 kilometers, they had a catchment area. Their ability to monetize the eyeballs into advertising, right? So we had another company which came and said we'll do it for single screens, could do anything. And I think the third is where, which is a very controversial topic, is the F&B margins. They're extremely high. So that has come through, that has played out to a large extent. 7-8 years back, you couldn't see the ROIC on the balance sheet. And that's when you go down and drill down and say the screen ROIC was higher, the balance sheet ROIC was not.
Okay.
They were investing, so you have to adjust for the capital investments which are happening into the business. And you could see that they could make 20% plus returns on their screen basis, and as the operating leverage plays out better. But what's happening now is the invasion of online content, and we have seen that though people talk a lot about broadband penetration, even the US doesn't have that higher broadband penetration. South Korea though has a higher one than US has.
Okay.
Right? So this will become a difference. We will have premium services coming up. People now are consuming better products, so people are building their dens, which have got their private viewing places. We still think as an entertainment format, films will still continue to do well. US markets are indicative of that people still go to cinema halls. So the way cinema halls are made, the way the exhibitors are creating properties, people will pay money as a premium to go for entertainment. And I think why it's worked in India is that in the smaller cities or even in bigger cities, there's no alternative to cinema, right? So it's not that you can have a rock concert, you're going for plays. It's very difficult. So for a lot of people, going to cinema halls is a normal thing. So yes, there is volatility in content, but I think good players long term can make sustainable money over there. So we think it's a very strong moat. Stocks tend to perform in shorter periods of time. They don't perform linearly. But I think exhibitors have given very good returns over the last 10 years, and I think over the next 10 years, they'll continue to do that. We think there's a structural business to be in.
Okay, no, my question was more about how do you view these?
So I think there are moats. They're very strong moats. Challenging the key guys, I think the first two players right now is very difficult. We have seen the third and fourth player almost disappear. There's a new third player, but who's more in the value segment. So you have PVR, Inox, and Cinepolis, and I think, and Carnival. So Carnival is in the lower player. Inox and PVR and Inox are clearly leaders, and they have very strong moats. And I think they will continue to do well. That moat is not going to disappear.
What about financials and the moats that they have, if you can call them moats?
Yeah, so I think in financials, the most important part is that, and I was saying earlier that lending money is the easiest part, recovering money is the most difficult part. For growth, you need to lend across spectrum. That means risk-adjusted pricing of your products has to be there. And I think a few of them who have demonstrated that over a period of time have done well, and a lot of people have tried to follow that model. And I think HDFC Bank was the first one to do that. The moat for HDFC is its ability to say that in a given cycle, this is my loss given default rate, this is the amount of NPAs I'll have, so I'll price the product at this level. And in good times, my provisionings are less, so I'll provide extra. In bad times, my provisions are going to be higher, so I'll take this money out and put over here. Hence the consistent 20% profit growth number. Second is in product innovation, technology. But I think the key in any lending business is asset quality control, right? So you have to be brilliant at technology, you have to be brilliant in reducing costs, and I think the top ones have done that. But the moat actually is in how you price it. I think Kotak has done that very well. In the NBFC space, Sundaram Finance in the last 25 years has done it extremely well. So if you don't price your risk properly and you do unbridled lending only for growth, and you don't get out and in at the right time, there's a problem. So whenever these companies have seen a problem in their segments, individual segments, they've cut down on lending. Whenever they have seen irrational competition, they have cut down on the lending. Even a company like Bajaj Finance, which is a market leader, it's very, it's the stock to be talked about in the last 4-5 years. When I remember meeting Rajiv Jain in 2012-13, the gentleman who runs the company, they were big in LAP. And he told me, Sudhanshu, we are getting out of LAP now, way ahead of the market, because LAP yields have fallen from 21 to 13, 14. We want to get out of major accounts. So they have huge technology, they have great data analytics, but also the sense that when the pricing is wrong, you need to get out. So the market is large enough. And as HDFC CEO Mr. Puri says, why do you guys keep on asking me about growth? Because there's enough potential. It's what you need to pick and choose. And what is your philosophy behind it? How do you go about it? What's the strategy behind it? And I think pricing that risk of credit in the cycle is very important. Banks which did that, and that's the moat. So everybody is replicating the technology that's available there. Some guys will do it better, some guys will not. But the top guys are doing it extremely well. So I think the moat is clearly over there.